All right, welcome everybody. I'm going to share my screen with you now. All right, I hope everybody can see the screen. The role of the independent trustee. Our speaker is Phia van der Spuy. Before I introduce her, let me just quickly introduce myself. I'm Jan Jordaan. I'm the director of Jan L Jordaan Incorporated Attorneys. That's my telephone number, email address, and our website. You'll see on the right-hand corner, this year we're celebrating our 30th anniversary, being in practice for 30 years. We specialize in the administration of deceased estates property transfers. We've got a whole department attending to that. We do wills. By the way, we don't charge for wills. We do transfers of properties, registration of bonds, cancellation of bonds. We're on the panel of ABSA, FNB, Nedbank, and Standard Bank. We do trust, the registration, deregistration, amendments, etc. And we also act as independent trustees. Before I introduce Phia to you, our next webinar will be on the 3rd of April at 10 a.m. The practical implementation of a living will, withdrawal of active treatment. Our webinar will be presented by Robert Jordaan. He's the CEO of the Zuid-Afrikaans Hospital, and Dr. Janila Nayasulu. Now, I had a meeting with Dr. Nayasulu, and I want to hear from her what happens practically that moment that the decision is made that there's no hope for life anymore, and she's going to share it with us. Please do yourself a favor and go and have a look at the YouTube video 0 to 0, where Dr. Nayasulu is very much a part of that. She's an amazing woman. All right, let's have a look. Phia, unfortunately, I can't see the top part. Phia, she's a chartered accountant. She's also registered with the Fiduciary Practitioner of South Africa, a master tax practitioner, a trust and estate practitioner, and the founder of Trustees, a professional trust practitioner. She also holds a BCom honors degree in industrial psychology. Sorry about that. Phia is the co-founded a company that digitized trust administration and accounting called Trustees. Her idea to digitize, my tongue is trust administration and accounting was born with the acted as a business coach for the Microsoft BizSpark programs technology startup. Trustees is evolving and is becoming a digital solution provider in the fiduciary space, disruptor. The group has expanded internationally, and the group internationally is called Wealth Ease. It operates from the Isle of Man. Phia writes about trusts and estate planning in various national newspapers, and is a regular on a regular basis to educate and enlighten the estate owners. She also recently published the second edition of a book called Demystifying Trusts in South Africa to educate all role players in a trust. She speaks at various conferences, radio programs, television programs, professional bodies such as the Financial Planning Institute and SIPA. I believe there's a number of SIPA members also part of this webinar today, and is also a guest lecturer for the universities on the topic of trust and estate planning. She's the examiner for the trust section for the Advanced Diploma in Estate and Trust Administration at the University of Free State. Phia has received the FISA Chairman's Award in 2020 for a contribution to the fiduciary industry. Clearly, we're dealing here with a specialist. Phia, thank you for your time. Thank you for sharing your knowledge with us. Phia, over to you.
Thanks, Jan. Thank you very much for the invitation. We got a nice crowd on board on a day after the public holidays, which feels like a Monday. So I'm sure you're all fresh and bright. So today we specifically want to look at the role of the independent trustee. Overnight, we've seen that there's this magnifying glass on trusts all of a sudden, and all of a sudden, trusts got a very different flavor. Why I'm saying so, if you just look at what SARS has done over the last couple of months, they have now made the board of trustees, now that's the Umi and Tani on the platteland, who in the old days did not even have an independent trustee and may still not have one. They made those boards of trustees third-party data providers, similar to banks. So the banks, for the last number of years, have fed information through to SARS on IT3s, and SARS use that information to pre-populate taxpayers' returns. Now, can you believe it? In a very similar fashion, SARS is now making and labeling the little boards of trustees, almost 1 million of them, third-party data providers to SARS, so that they can feed information to SARS as part of this process to pre-populate individuals' tax returns for those beneficiaries who have received any distributions in a particular year. So completely different flavor. And as we know in South Africa, we often deal with lay people who act as trustees, because in most instances, our typical family trusts consist of the estate planner, their spouses, their children, their friends. And it's only until relatively recently that we started speaking about the necessity to have an independent trustee appointed. So from a SARS perspective, very different role that a board of trustees has to play. So it's not just the independent trustee, it is the board of trustees. When we look at the I label them the FATF regulations. Those are all the hype in the media over the last couple of months, where, again, trusts have been grouped under, a magnifying glass together with other beneficial owners. And that is, by the way, a worldwide concept that the regulators want to know who ultimately benefits from a structure, because often companies and those entities are set up in a way to actually hide the ultimate beneficial owner. So guess what? Trusts in South Africa, like in the rest of the world, have been identified as potentially allowing such hiding of the ultimate beneficial owners. And we've been, and we'll discuss that later now, through a review by a peer group, and obviously we were found to have failed, and quickly measures were introduced. And now, because of those new requirements in terms of the Trust Property Control Act as amended, now the boards of trustees have to report and keep information on beneficial owners. And for the first time in the Trust Property Control Act, there's now huge fines and further penalties introduced, which wasn't there before. So you could have a fine of 10 million rand, imprisonment of up to 5 years, or both. So that is the first time where trustees are really going to be punished. So I think, when we go through the slides today, if you are an independent trustee, you have to think twice whether you are going to be able to stand the test of time and to accept trusteeship. Also to be carefully considering who your co-trustees would be. All of a sudden, it creates this massive opportunity for people who want to be independent trustees. I deal with different people every day. You get two groups. The one group saying, we're out of here. If this is what's going to be expected of a trustee, we're out. And then the other group saying, we see there's a huge business opportunity. And all of us know, who are involved with trust, that historically, trust services, grouped very broadly, have been provided in a slapdash free basis, where the attorney would typically set up the trust deed and would not even charge the client, because it's part of a business relationship where they probably look after their companies, their personal affairs, etc., etc. So the trust was set up for free. Often they would say, would you be our independent trustee? Oh, no, sure, I'll be the independent trustee, not charging a fee for that, did nothing in any event, so there was nothing to charge for. And then that really created a problem. And when you look at the accountants, often they also provided, accounting and tax services for free historically, because very little was done, if ever. If we just look on an average basis, SARS stats say that trusts on an average basis are 7 years behind. So again, you can just see the slapdashness, for lack of a better word, and what that caused, the absolute havoc in trust in South Africa. So the independent trustee, even though they were appointed in some instances in the past, and now obviously we're going to have a look at, for all new family business trusts, they have to be appointed. All of a sudden, that's a different flavor now. So that now people have to start pricing for risk, because, to pick up a 10 million fine is not going to be, very nice. And you need to be rewarded for that risk. You need to take out proper professional indemnity cover, which costs money. So days are over, to actually provide these services for free. And therefore, I'm excited about all these changes, because it creates a proper business opportunity now. And all of a sudden, people would start looking at paying for these kind of services. We'll go to the next slide. So an independent trustee is the person who is actually standing, with the other trustees. There's actually no distinction in the Trust Public Control Act between types of trustees. And we have to find where they may be differently treated. And we'll have a look now at the sworn affidavit soon. But, so the independent trustee's role is that person who is actually making sure that the trustees are acting in terms of the trust deed. Most lay persons have never read that trust deed. So for those independent trustees who have not checked with their co-trustees, where they've actually physically read and understood the trust deed, you are already failing. So, nowhere will there be an excuse, and, could carry on labeling person as lay person trustees who did not know what was happening in a trust deed, or what was required of them. That is one of the roles of the independent trustee. So when we say, why do we need an independent trustee in South Africa specifically? Unique setup of trusts. When we look at setting up trust in the islands overseas for estate planning purposes, often you would only have the professional trustee who actually have to serve as the single trustee, because we obviously, from a SARS perspective, don't want to be labeled as a trust effectively managed in South Africa, because then we lose the whole historical tax advantage of actually having these international structures. So you literally had to rely on your professional trustee, which in many instances the people did not even know, and you have no business relationship with, who actually manage the affairs of the trust. Obviously, they overseas, they have the protector role, which is like a role they dumped on top of the trust, so that this independent trustee or professional trustee, can't run away with your money. Obviously, in South Africa, we do not have that protector role, and I've seen SARS sneaked it into their new trust tax return, which I have a fundamental issue with, and I will be taking it up with them. That is a role that we do not have in South Africa. So the protector cannot have a place in South Africa, because that would really place both the independent trustee as well as the normal trustees at huge risk, because from what I just discussed, when we look at SARS, when we look at the FATF measures, it is the board of trustees who will be held accountable. So it is super important to make sure that the board of trustees is set up correctly. Why the independent trustee? That started many, many years ago, and there was a Tamestra case in 2002 where the courts already said, in many instances, the trust is just set up in form, but actually when you look at the substance, it's actually not a trust. And then we all know the Land Bank versus Parker case in 2005, where the courts really got fed up with these family members who all serve as trustees. They're all trustees, they're all beneficiaries, so they're kind of in all the different roles, and literally taking the banks for a ride by all of a sudden denying things, and got themselves out of a situation where the banks could actually claim their money back from a trust. So there's been a couple of these court cases which you can read. And then the land bank case in 2005, already the court said, it would be nice to have something such as an independent trustee to actually make sure that there is this independence, because it's like murky waters where you trustee beneficiary, you just can't seem to be acting independently. So the role of the independent trustee became more and more important, and that is specifically because we've got this unique mix of trustees in South Africa. So, and then obviously in 2017, the chief master, before he retired, brought out a directive, and in the 2017 directive, he now stipulated, why an independent trustee is required, what that person should look like. And yeah, so for all new family business trusts now are full, so it's only new trusts supposedly. So that's what I'm saying, with all these FATF requirements, SARS, a lot of the old trusts still do not have an independent trustee. And I am convinced those people don't even know of all these obligations, plus the massive penalties and fines, staring at them. Yeah, so you will need an independent trustee now for a new family business trust. And family business trust, typically the type of a trust that we dealt with in the Land Bank versus Parker case, that is where the trustees, in terms of the trust deed, have the power to borrow money. So that is to actually protect creditors of the trust. That's how it was started. And obviously we can see now with kind of second generation trustees, the founder or estate planner is no longer around. So it is important to have this person who can kind of oversee that everybody's acting in accordance with the trust deed, which should stipulate that they should act in the best interest of all beneficiaries. Because you can't just have a trustee who's also a beneficiary and, they just make all decisions, for their own benefit. That is not allowed. And I think it's human nature. So it's very hard to remain independent when you are actually also a beneficiary, or if one of your children are beneficiaries. So the why is the chief master now requires it, and the courts have been pushing it for quite some time. Next slide. So the independent trustee's role is that person who is actually making sure that the trustees are acting in terms of the trust deed. Most lay persons have never read that trust deed. So for those independent trustees who have not checked with their co-trustees, where they've actually physically read and understood the trust deed, you are already failing. So, nowhere will there be an excuse, and, could carry on labeling person as lay person trustees who did not know what was happening in a trust deed or what was required of them. That is one of the roles of the independent trustee. So when we say, why do we need an independent trustee in South Africa specifically, unique setup of trusts. When we look at setting up trust in the islands overseas for estate planning purposes, often you would only have the professional trustee who actually have to. Okay, so who can be an independent trustee? The answer we can find in that Chief Master's Directive. And it's quite interesting. They didn't look at a professional person. So it need not be just a professional person. So they went on to explain that it could be an accountant, it could be an attorney, it could be an advocate, it could be a member of FISA. Interesting that they mentioned us as members of FISA specifically. And then it said it could also even be a business associate. Now there I have a problem, because I can assure you if the estate planner's business partner becomes the independent trustee and the spouses get divorced, I can assure you it's going to be super hard for that person to remain independent, because now his business relationship with his business partners at stake. So guess whose side he's going to take. So I'm saying, it's very simple when we look at, who qualifies as an independent trustee. And it's really, when you stand in court one day, we can have definitions to the T, we can tick the boxes, because there we say, it doesn't even need to be a professional person. So it's in your gut when in court, and you have to say, have you acted truly independent? Have you really acted as such or not? So yeah, so as I said, that doesn't need to be a professional person. You actually have to demonstrate that you can act independently. Now, considering who our other co-trustees are, it's the lay persons, as we have said. So very important when we actually appoint an independent trustee, is it not good practice then for the family to actually go and seek somebody who can actually assist us with things such as the reporting to the master, the retention of documents, retention of required information now, which is super onerous, as well as now this reporting to SARS, by becoming a third-party data providers to SARS. And then there are additional roles with SARS, and I'm sure all of you have come across that. SARS wants to know who is the representative trustee, and I think that makes sense. That is who can they actually speak to, because we have the board of trustees, there's joint ownership, joint control. So not one trustee, has got a bigger obligation than the other, but SARS wants to know a person who they can speak to. And, unfortunately, that person potentially has got a bigger liability when we look at the reporting requirements to SARS. So you don't just take on the appointment as the representative trustee, not knowing, what is expected of you and understanding that role, especially if you as an independent trustee is given that role. And, just considering the composition of a board, and I'm sure we see this every day, because we just have to now tick this box when we register a new family business trust. Often, the family is looking for somebody who's not going to make too much noise, who's literally going to become the puppet trustee. And I remember the Slipknot case in 2011 said the courts will no longer allow a puppet, a silent, or a sleeping trustee. So do not think you're going to get away by acting as an independent trustee and the family just run the show. So you've got sitting with two scenarios here. Is will you be able to stand up to the rest of the board of trustees? And are they potentially going to use a measure in the trust deed where the majority rule can be applied for making decisions? So actually, and that's why the interplay with the number of trustees that a trust deed requires. If there's an uneven number, for example, the husband and the wife are trustees and they bring you in as the independent trustee, you can clearly see people can use that majority rule and literally outvote you. So outvote either actively and, going to sideline you, and then you just need to make sure that you've been participating all the time. You can't just claim ignorance or say, you've been excluded, rather resign then on those trusts. And I think especially with all these fines, staring at us, rather resign as an independent trustee if these kind of abusive relationships exist. And, rather get out of those, because I think the risk is just too big for people to not play an absolutely active role. And as I say, if there's the majority decision prevails and you are, partaking in trustee decisions, doesn't mean that if you're outvoted that, you'll have a problem. Just you have to demonstrate that you are actively participating. So who can be an independent trustee? I've written about it in my book a lot because I have a big gripe. When you look at all the court cases, you will see that in many instances, it is unfortunately the accountant, the attorney, the financial advisor who were friends and or had a business relationship with the founder / estate planner, who actually advised, this person, incorrectly, for something to sway in their favor. And unfortunately, when you look at the professional codes of the attorneys, of the accountants, of the financial advisors, I have analyzed that the professional codes of the different professional bodies are very much against a potential conflict of interest. Now, you have a conflict of interest by design if you are the business partner of this person, or even if there's just a perceived conflict of interest. So it is very important to analyze that you are not acting, against your professional code by actually being a trustee of a specific trust. So when people say who now actually does qualify as an independent trustee, and I've written an article about that, it should actually be a complete stranger to the trust. I mean, isn't that quite scary? So you don't know this person from a bar sub, because the moment there's a relationship, there's this potential conflict. So we should actually have a complete stranger to the trust who can be a true independent trustee. And I think there we are creating a massive opportunity for typically Phia members or people who actually want to provide trust services in a professional way and can charge for it and got infrastructure and have systems to do it. I think that is a great business opportunity. And we often are approached by people to ask, who can we approach that is reliable to actually act as an independent trustee. So I think this creates a massive business opportunity for people to to become independent trustees. Next slide. So what are the duties of an independent trustee? And there immediately a couple of things spring to mind. So I almost want to say it is the independent trustee, equally so the other trustees, because the board of trustees is the custodian of trust assets, and they have to look after the trust assets, for the benefit of beneficiaries. All trustees have a fiduciary responsibility, but we hear this word kind of thrown around loosely. A fiduciary responsibility is a legal obligation. So by the way, where you have a duty of care, so there we can see in section 9.1 of the Trust Property Control Act. So it's a legal obligation to act in the best interest of somebody's assets that you are taking care of. So there's no distinction, as I said, between an independent trustee and normal trustees. And we are still trying to seek for, what is the difference between a normal trustee and professional trustees or independent trustee. And I think we are going to find it in the communication with the master, because now remember, it's the master who now requires the appointment of this independent trustee. So Jan, if you can just manage a trick there and show us the J417 first. So the J417, I just want to remind you, we all know the J417 for those who work in trust, but I think we are so used to just tick, 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 and then we sign. I think we must carefully look at some points on the J417, because all of us, all trustees, not just the independent trustee, have to complete the J417. And I think it's important there to see what the similarities are and what we are all agreeing to do as a board of trustees. Because remember, with the board of trustees, we have joint ownership, joint control. So that principle has been proved through and through the courts. And I love this Lagrange case, which you can read, where the courts clearly said you can't use the majority rule to manipulate trust decisions. You have to involve the entire board of trustees. And that stems from the notion of joint ownership, because trustees own all the trust assets jointly in their capacity as trustees for the benefit of beneficiaries. So it's the joint ownership and the joint control. And joint control means I have to be involved in decisions. Whether I'm an independent trustee, whether I am a normal trustee, it does not matter. The moment you're acting as a trustee, you have to participate. So I just quickly want to go through some aspects in the J417. So this is what all trustees sign. And there it is. Okay, so it's a family business trust. So there's the questions there to determine now, do we need an independent trustee? So if you answer yes to any of those, the master is going to require you to to appoint a independent trustee, but we see the master don't even care about this. They blanketly say, new trust, where's your independent trustee? So yes, so the requirements there, is this a family business trust? So that's what I've explained. Is it a new family business trust? And if the answer is yes, then you potentially going to need a independent trustee appointed. I am an independent trustee, so there the master can already pick up. And if you say yes, then you have to do the sworn affidavit in addition to this. So there's a distinction between a independent trustee and normal trustee. So we'll get to that now. Is the trustee also a beneficiary? You can see that's one of the requirements for a family business trust. All the trustees are beneficiaries, and then the trustees related to beneficiaries or the trustee, and then all the beneficiaries related to one another. So you can see this is typically our family trust as we know them. Just want you to have a look at the next page on the J417. So there you declare the following. Okay, obviously I've never been convicted, haven't been declared insolvent, I've never been removed from office, and they're going to expand this list now after the amendments to the Trust Public Control Act. There's now a whole big elaboration on the Trust Public Control Act in terms of who cannot act as a trustee. Plus, there's going to be a register kept eventually by the master whenever they're going to be ready. There's going to be a register kept of all these people who do not qualify to act as trustees. So that's going to be interesting. So, and then look what all trustees are saying. I, as a trustee, have knowledge and I understand the law of trust. Now, how are you ever going to say no? That you're just going to keep face, at least just say yes. Or you know what, the person who's registering the trust have someone tick them for you. They don't even ask you. So they just say, right, sign here, at the bottom of the form, and they already completed the whole form for you. As a trustee, you acknowledge and understand the law of trusts. So especially where we're going now with SARS, where we're going now with these new measures after the FATF measures have been introduced, you're going to have a hard time to say, oh, no, you know what, my husband, never involved me. I didn't know what I was supposed to do. I was just put on as a trustee. So those days are over. And I think this is coming back to that Slipknot case in 2011, where the court said no sleeping puppet trustee will be allowed, because you have to have knowledge of trust law. Look at that. Then the other one is the trustee is aware of the fiduciary duties and responsibilities. So you know what's expected of you. So this fiduciary legal responsibility to actually act in the best interest of the beneficiaries. And then by accepting your position, you are exposing yourself to civil and criminal actions in terms of Section 9. So Section 9, as we've just seen on that slide, requires of every trustee to act with the necessary care, diligence, and skill. So look at skill as far as understands the law of trust. So care, that's obviously, considering the needs of everyone. Diligence means kind of, on a constant basis, following, doing due process, understanding what the trustee requires, that's diligence. And skill, which means we have to have skill to actually manage a trust on behalf of a set of beneficiaries. So here you are saying that you will act in terms of that Section 9. I've seen many trust deeds where they kind of excluded liability for trustees in terms of Section 9.1 for any repercussions. Section 9.2 clearly says, if any trust deed exempts a trustee to act with necessary care, diligence, and skill, those provisions will be void. And this is what you are saying here. I accept that, I can be held personally liable, both in a civil and a criminal basis, if I do not act in terms of Section 9.1. Is that not scary? And we're still on every single trustee. I'm not even talking about the independent trustees. You also say, as a trustee, by accepting the position of a trustee, you are exposing yourself to removable action by the master for failure to comply with any lawful request. Okay. And then the trustee will exercise direct, special, personal control to maintain accurate trust records. You see here, this is not the independent trustee. This is not a trustee, not the main trustee, not the controlling trustee or the executive trustee, as we often refer to them. This is every trustee saying, I will exercise direct, special personal control to maintain accurate trust records. Now, can you see how this is now going to extend to the new FATF requirements, where we have to keep information on beneficial owners, which means, you know, in the absence of a system where we can have a central repository of information, it's going to become problematic, because that means like every trustee has to maintain, you know, a set of records of the trust, which we know is kind of hardly possible. So it's going to become very important for boards of trustees to realize that they're working together as a board because of this joint ownership, joint control. But you have personal liability if you do not comply with these. Okay, so that's as far as this is concerned. Then over and above this, you are now completing a sworn affidavit as the independent trustee. And for me, this is the distinguisher in terms of how an independent trustee may be viewed differently, or to be given like a extra role, you know, in terms of trust in South Africa. So this is just completed by the independent trustee, and look at it, it's a sworn affidavit. So see, for these things that you normally just say, you know, just sign on the line, that you actually never read these things, and it's going to come back to bite you so hard if you do not understand them, and if you do not kind of live by these rules that you actually undertake to follow. So what you are declaring is, I am qualified to act as a trustee, qualified, and do not find myself in any of the circumstances mentioned in 22, which is that list of potential disqualifiers to be removed as a trustee, which will justify my removal and undertake to inform the master immediately should any circumstances arise. So it's an obligation on you to actually inform the master. But this whole central list that's going to be maintained now, you know, the master would probably over time be in a position to control that, but it's your obligation to inform the master. I undertake to inform the master should there be any changes in the capital income beneficiaries in the trust. This is not a trustee responsibility, it's an independent trustee responsibility. So the moment we are changing the income and capital beneficiaries in the trust, we need to inform the master if you are an independent trustee. Interesting. I undertake to furnish the master, when requested to do so, with any information which the master may require in connection with the affairs of the trust. So it seems to me like the master is going to rely on the independent trustee to actually provide information, you know, in the event that the master may request information in terms of Section 16 of the Trust Property Control Act. You also declare that I have no family relation or connection, blood or other, to any of the existing or proposed trustees, beneficiaries, or founder of the trust. That's a mouthful that I just want to unpack quickly. This was coming out of the Chief Master's Directive in 2017. So that's why I'm saying it cannot even be your best friend. And that's why I disagree with the master coming up with this definition and then allowing a business associate of the estate planner or the founder, because I really do believe there's a conflict by design. So the words that they've used, I interpret enough and analyze it in detail in my book, because I wanted to understand what did the master mean, and that's how I got to the conclusion it should be this complete stranger. So it's no family relation. Now, relation is just a relationship. It doesn't say, you know, just by blood. It could be by blood or other. So it's a family relation or connection. See how loosely they've used the term. So that's why I'm saying be mindful, because it's a gut feeling. You know, when you can stand up in court and truly say, I've acted independently and I'm not biased because of a relationship, a connection. And look how far they take it. It's not just to the beneficiaries, it's not just to the trustees, it's all of them. Existing or proposed trustees, beneficiaries, or founder of the trust. So I think before you can declare that, think twice, because it may come back to bite you, especially depending on how you interpret that. So if you believe your business partner, like the directive said, and you still want to take on the role of an independent trustee, make sure you can justify in your mind why you're saying you qualify in terms of that point 4. Then you also declare that I'm competent to scrutinize and check the conduct of the other appointed trustees who lack a sufficiently independent interest in observance of substantive and procedural requirements arising from the trust instrument. So look what you do there. You are competent. So it means there's skill and you have potentially experience. So you need, and this, I believe, is the main distinguisher in terms of just the role that we play as independent trustees. You need to scrutinize and check the conduct of the other appointed trustees, okay? And then you need to report non-compliance. So it's not that easy, especially if there's a relationship or a connection, to go and report your friends or your business partner, etc., etc. So this, again, this is something that you are declaring that you are competent, that you can scrutinize and check the conduct. And then you also say that I have no reason to conclude or approve transactions that may prove to be invalid because I'm knowledgeable in the law of trusts. See there how you reinforcing that you are knowledgeable in the law of trusts. So before you become an independent trustee, you need to make sure that you are a specialist in trust law and that you are knowledgeable and can potentially then guide the other trustees. And then clearly, if you are a beneficiary, then you could by design never be labeled as an independent trustee. So then you're just saying I've got no interest as a beneficiary. And then you also declare that you were never disqualified by the Trust Public Control Act from acting as a trustee. So never. So with the new amendments now, where there's an automatic disqualification, they've elaborated that list. So I wonder, because it's actually quite a complicated section that you can go read, section 6. There they have certain time frames that you can qualify again. So if this is saying I was never disqualified, if you're rehabilitated in terms of those provisions, it does not look from signing this form that you could ever be independent trustee again. So can you see how important it is to actually go through these things and on a trust by trust basis, make sure that you can tick all these different boxes, and just to protect yourself that you are a truly independent trustee. And then again, as I said, be mindful of sanction by your professional bodies if you can't demonstrate that you are 100% independent from the other trustees and the beneficiaries. Okay, so I think we found our answer in terms of what the main difference is between normal trustees and independent trustees. I think it lies here, and especially number 5. You have a special role almost to scrutinize and check the conduct of the other appointed trustees, and it's sometimes not a very enviable position to be in, and it makes it hard because they actually approach you to be appointed, yet you have to actually maintain this 100% independence from the rest of the trustees and or beneficiaries. Okay, so we can get back to the slides.
Phia, can you see the slide?
No, I'm still on affidavit.
Okay, let me quickly.
I see the questions are storming in, so I think we want to leave proper time for that. So I'll see if I can push ahead. I can keep you busy for the whole day with these things, but
can you see the screen now?
Yes, thank you.
Thank you.
Okay, so we speak here about the duty of care, diligence, and skill in terms of section 9.1. We see that every single trustee actually has this responsibility. No one trustee can be absolved from having to meet this requirement. And every trustee can be held personally liable. Therefore, even more so for the independent trustee, you can literally not stand to benefit anything from the trust, but from their fees and professional input, for any wrongdoing. So it is just not worth it anymore to act as an independent trustee, especially where you are conflicted and trying to justify why you should be regarded as 100% independent. Okay, so next slide. Okay, so yes, so then you would say, when should I actually now accept appointment as an independent trustee? This is just becoming too risky. It is becoming too risky because you're often up against a family who's got their own agendas that actually didn't really want to trust because they want to lose control. Us South Africans just find it super hard to, reach that absolute fundamental requirement for trust, which has been demonstrated in the Parker case, where the court said there needs to be a separation between ownership and control and enjoyment of trust assets. We just cannot relinquish control. So we're building all sorts of measures to try and retain control and, not for other people to tell us what must happen with our assets. In the trust, often people speak about my trust, my assets. When you look at the Barnard case many years ago, I mean, he even at the bank put the trust assets on as if, that was available to be provided as security or to give kind of substance to his assets that he owned. So it is really something to be very, very mindful of when to accept the position of independent trustee, and then to actually provide that as a specialist service. A lot of people, traditionally the banks, they wanted to control the bank account of the trust because then nothing can happen without their consent. I think we must be very careful, how we balance managing our risk as an independent trustee versus how we are to be seen to be acting as a board of trustees in terms of joint ownership, joint control. So the control of the bank account, that is really just executing a transaction. Before that, there's actually a lot to take place. We need properly constituted meetings, minutes. We may require resolutions. So the bank account, I think it's probably a final kind of a control to make sure, these family members don't just do as they wish. And we often see it still, where they just do whatever, and then the financial statements get done years after the financial year end, and then we try and kind of, work backwards, what resolutions do we require to back up the financials. And then the independent trustee is just expected to blindly sign all of these because, we need to, get the compliance of the trust up now. I think that behavior should be stopped very early on for independent trustee. And you know what? If they're not respecting your stance of you need to be involved in all decisions before transaction takes place, then you probably have to resign because you are potentially going to end up in trouble, if you do not take that stance. Regular meetings. The constitutive charter of the trust is the trust deed. Now you see there the independent trustee declared that they understand the trust deed and they need to make sure that the trustees are acting in terms of the trust deed. So regular meetings, most trust deeds require us to meet once a year. There may be more. That's a personal preference of the estate planner. We need to make sure that we are acting in terms of the trust deed. So if there is a meeting required, any trustee, normally in terms of the trust deed, unless there's very specific rules built into the trust deed, I think that is one area where we need tight control. How decisions are to be made, how meetings are to take place. Do we need any notice? Because you can see there's potential for abuse. So the clearer, the more rule-based that is, the better. But careful if we don't follow those rules, because then it's very easy for somebody to turn around and say, but you haven't acted in terms of the trust deed. This is just an alter ego trust. So there's a fine balance between building in checks and balances and direction in the trust deed versus, the trustees don't even adhere to those requirements. I've spoken a lot about fees. Fees is becoming risk-based pricing. Considering the 10 million rand fine that you as an independent trustee can pick up, or 5 years in prison, or both, together with, often people putting you on as, the representative trustee, and you don't submit the information to SARS, because remember, it's a board of trustees who are responsible to submit that information to SARS. They're going to keep the representative trustee liable. Now, in many instances, or some instances, the accountant/tax practitioner may have agreed to act as a representative taxpayer as well. In that instance, then you have to make 100% sure you have been involved in that decision. Don't come to the tax return and you declare, it's complete, accurate, whatever, and then, you haven't really been part of decisions and discussions during the year. So if you're in a professional capacity, you are a representative trustee for tax purposes, it's even a bigger risk. So risk-based pricing, a lot of times people say, yeah, but the trust can't afford these fees. Then maybe you must review the trust, whether it is actually required from a state planning perspective. Because if the trust doesn't even have money to foot these bills in terms of costs, then maybe, these assets should not have been kept in a trust, and it just does not warrant the proper management, because it is costly. Time is money. When you look at all these liabilities that's been dumped on the boards of trustees, you actually have to price for that risk. I've spoken a little bit earlier about the trust program. So, that's what we have developed over the years, is a central repository where all the trustees can work together. We get the right behavior because every trustee can participate. It's transparent. We have the necessary information. There's a load of information, and we've amended the system again now to make provision for these FATF requirements that have been built in, to keep information on beneficial owners and to actually report that, at the right level. Also, as far as the IT3Ts are going to be concerned, which on SARS's website, they speak about September this year, that will be compulsory, but it looks like they're only going to be next year. However, there's still disagreement at SARS. So you have to have a mechanism to actually keep records of distributions and be able to feed that through to SARS. Now, that should be done in a digital fashion, especially for those independent trustees/accountants who do bulk volumes of trusts and they want to submit bulk information. Then a system is absolutely paramount to make sure that we, can manage the loads of information that we need to report to different people. And especially as far as the master is concerned, where we need to now report any change. And I said there, for a tip for trust service providers, remember the beneficial owners are now the founder. So that may be the secretary of the attorney who set up the trust 30 years ago. The family's got no connection or relationship with that person who acted as the founder. You as trustee have to get that information. The question has been asked, up to what level must trustees go? Must you do whatever it takes? Then we start adding cost and time again. It's risky, because where do you stop to say, I cannot find this person, I don't even know where they're alive anymore. So it is very important to keep information on all those parties who are considered beneficial owners now. And the moment it changes, like the addresses change, they start emigrating. Can you see, and especially with later generations, the number of people that you have to report on is just growing and growing and growing and growing. And it's becoming really risky, because how, the boards of trustees, especially the independent trustee, how are you going to know where the kids have been immigrated to? Where's this secretary who was the founder of the trust? So I think one good thing that Phia has achieved by jumping up and down when the regulators brought out these new provisions. They said often in the old trust, the estate planners didn't want their children and all the beneficiaries to know that they are beneficiaries and potential beneficiaries in the trust deed, because often that may lead to kind of early acceptance of benefits. And then we know that, for example, you cannot amend a trust deed without their permission. So the Fiduciary Institute said, we don't want that unintended consequence by kind of reporting on all the beneficiaries now. So the final provisions came out, and now they only need for the named beneficiaries in the trust deed. So I'm saying, unfortunately, I think just named beneficiaries in the trust deed, so no classes, immediately undid this whole exercise of collating information on beneficial owners, because all the terrorists are just going to hide behind a class now. I'm also proposing to clients, maybe just from a risk perspective, to reduce your risk, reduce the number of named beneficiaries best you can, and throw them in a class, because at least it will help us in the short term while we're trying to figure out how bad is this going to affect us, and are they going to dish out penalties left, right, and center. So yeah, so just a tip on beneficiaries. It's now just the named beneficiaries in the trust deed. They should actually have at least said, beneficiaries who accepted benefits. But can you see that's now a different term? So beneficiary accepted benefits could be in a class. And once they accepted benefits, they now need to potentially be party to a trust deed amendment. And those people would typically come into the IT3Ts. When we look at the beneficial ownership information, you don't care whether they've already received benefits, which is crazy if you think about it. And I am wondering whether they're not going to amend that to provide information on at least beneficial accepted benefits. But for now, we're in a class and only the named beneficiaries in the trust deed. But still, it doesn't reduce your risk, especially if you're the independent trustee, you're quite removed from the family. And not intricately involved in terms of when they move. The time frame for giving information to the master is still, or having it available is still unknown, because we know in the Trust Public Control Act within 14 days that a trustee's information changes, they have to notify the master. Most people don't even aware of that. So yeah, there's not a time frame provided for FATF. So it's going to be interesting to see, what is the leeway. So with the trust program, what I want to get to is trust service providers need to get some indemnity, especially if you're acting as the independent trustee, to allow the beneficial owners in a trust to supply you with their updated information. And in the event that they don't, you better get an indemnity, because the penalties are rife. And I'm just worried, in the absence of the master not up and running yet with their digital registers on beneficial ownership, who we have to report into, anytime soon when they're ready. I am worried that they're going to knock on the doors of the trust service providers, independent trustees, etc., to kind of make examples of them. Okay, next slide. Liability for negligence. It's been in a number of court cases. There's a Van Zyl versus Cade case where personal liability of trustees have been established. The court said that, in many instances, they will recognize the existence of the trust for specific purposes. It will be disregarded, and then trustees can be held personally liable. Now, if you look at the personal liability, and so by the way, that's personally and jointly, so they can go after one, after many. So the independent trustee is part of the mix with the family trustees. And then over and above this, it is the factor of penalties that we're facing. So I think you can see the pricing for risk is becoming more important than ever. And it's much easier conversation to have now with clients to say, I have to price for risk. I've been providing this service for free for my life, but it's a different ballgame now. So, if you're not prepared to jump on a system such as ours, and you're not prepared to play by my rules, probably better to sacrifice and resign as an independent trustee, because of this liability that you may face, and now on top of that, the new FATF penalties as well. Next one. So yeah, I've briefly spoken about the FATF requirements. There's been a lot in the media. So FATF is obviously where they do peer reviews, and then there's a list of 40. I've briefly spoken about the FATF requirements. There's been a lot in the media. So FATF is obviously where they do peer reviews, and then there's a list of 40. I've briefly spoken about the FATF requirements. There's been a lot in the media. So FATF is obviously where they do peer reviews, and then there's a list of 40. I've briefly spoken about the FATF requirements. There's been a lot in the media. So FATF is obviously where they do peer reviews, and then there's a list of 40. I've briefly spoken about the FATF requirements. There's been a lot in the media. So FATF is obviously where they do peer reviews, and then there's a list of 40. I've briefly spoken about the FATF requirements. There's been a lot in the media. So FATF is obviously where they do peer reviews, and then there's a list of 40. Yeah, so the FATF requirements, trusts have been identified, and now the beneficial owners of a trust have been identified as the founder, the trustees, and the beneficiaries. Now the fiduciary institute and the broader fiduciary industry has pushed back a lot in terms of this is not how trusts work in South Africa, because initially beneficial owners were spoken about in relation to companies. And we look at how SARS treated beneficial owners. The first kind of arrival of that concept was in relation to shareholders who receive dividends. So you can see it's a much easier, and in that sense, a beneficial owner, of course, it is the shareholder, the ultimate shareholder, because often people put in directors and management who's obviously not the person who's hiding somewhere behind the company who's going to benefit. And in South Africa, you often don't even know who the shareholders are. You can just, track the directors. They obviously taken that and they extrapolated and extended that to trust. And now they try to find potential people who's sitting in the mix there, because you've got this flexibility. You can play one or more role. And they said, just give us, for everybody. So I'm saying in South Africa, because now they're kicking and shouting and say, but the trust is not a legal entity or legal person like a company. It's just a accumulation of assets that the trustees manage on behalf of the beneficiaries. I've gotten over myself. And when you read the regulations of FATF, they even recognize that, the trustees and the founder may not be the beneficial owners, yet they require information on all those parties. So they should just have given it a different label in South Africa and say, parties to trust. So beneficial ownership, I'm not even going to carry on too much in terms of who is not, and, why are we upset that, they combining everybody, in one definition. The penalties that I've mentioned, unfortunately, if you do not keep information, now it's not just on the beneficial ownership of all those parties. You need to keep their addresses, their details. You need to keep it, and you need to report it to the master. You also have to now keep a register of accountable institutions that you deal with. You also have to inform when you deal with an accountable institution. Now, I've done a webinar last week sometime where I said, first of all, the trustees have to now understand who accountable institutions are. That definition has been widened substantially. So it's not just the banks like we used to know it, before. We need to make sure that Board of Trustees understand who qualify as accountable institutions. The moment we do transactions with them, we need to tell them we are actually in our capacity as a trustee. Now, I'm saying that's probably going to require us going forward to at least put it in writing. I don't want the bank to come back and say, oh, but you never told us you're here as a trustee, or, your accountant or whoever who qualifies as an accountable institution. put it in writing that you act in your capacity as a trustee. I mean, it's ridiculous, but that's what it requires. And so, by the way, if we don't do that, this 10 million rand penalty or 5 years imprisonment, can bite you. If we don't keep beneficial ownership information updated and reported to the master eventually, 10 million rand fine. And also, report or register of accountable institutions we deal with. So if we have one transaction with them or we have a business relationship with them as defined, we now have to keep a report as well of these accountable institutions that we deal with. So it's just odd because accountable institutions in the form of, for example, a bank, they need to report to the FIC, any business relationships or single transactions, and then there's certain anomalies. So I don't know if they want to kind of compare the two lists now, but yeah, just be mindful. If you don't do that, you may be liable for this fine. So there's a lot of extra layer of compliance. So therefore, I think the independent trustee can really play a vital role as far as this new requirement is concerned. It is hopefully a person who understand the law of trusts and can guide the rest of the trustees. And now more important than ever to actually find help, because where there's only the family trustees, it's going to be problematic for them if they're not even aware of these requirements and have a means of recording that and reporting that. Okay, let's see what is left. I don't even know which slide we're on. Yeah, what is grey listing? I'm not even going to go too much into that. That is where we failed the test and there's now this bigger magnifying glass on us. And then obviously in an attempt to bypass being grey listed, 22nd December last year, government sneaked through some amendments to trust property control, like these ones that we spoke about now, which are super onerous. So while everybody was on the beach, I don't remember if it was a sunny day or not, but the 22nd of December, they sneaked these through. And most of these requirements from a trustee perspective is effective from 1 April, so which is in less than 10 days. So very important that people are up and running and understand this, and as an independent trustee to make sure you know what's expected of you and to have evidence that you keep this information on all the beneficial owners as defined. Okay, yeah, what is grey listing? I'm not even going to go too much into that. That is where we failed the test and there's now this bigger magnifying glass on us. And then obviously in an attempt to bypass being grey listed, 22nd December last year, government sneaked through some amendments to trust property control, like these ones that we spoke about now, which are super onerous. So while everybody was on the beach, I don't remember if it was a sunny day or not, but the 22nd of December, they sneaked these through. And most of these requirements from a trustee perspective is effective from 1 April, so which is in less than 10 days. So very important that people are up and running and understand this, and as an independent trustee to make sure you know what's expected of you and to have evidence that you keep this information on all the beneficial owners as defined. Okay, yeah, what is grey listing? I'm not even going to go too much into that. That is where we failed the test and there's now this bigger magnifying glass on us. And then obviously in an attempt to bypass being grey listed, 22nd December last year, government sneaked through some amendments to trust property control, like these ones that we spoke about now, which are super onerous. So while everybody was on the beach, I don't remember if it was a sunny day or not, but the 22nd of December, they sneaked these through. And most of these requirements from a trustee perspective is effective from 1 April, so which is in less than 10 days. So very important that people are up and running and understand this, and as an independent trustee to make sure you know what's expected of you and to have evidence that you keep this information on all the beneficial owners as defined. Okay, yeah, what is grey listing? I'm not even going to go too much into that. That is where we failed the test and there's now this bigger magnifying glass on us. And then obviously in an attempt to bypass being grey listed, 22nd December last year, government sneak through some amendments to the Trust Property Control Act, these ones that we spoke about now, which are super onerous. So while everybody was on the beach, I don't remember it was a sunny day or not, but the 22nd of December, they sneak these through. And most of these requirements from a trustee perspective is effective from 1 April, so which is in less than 10 days. So very important that people are up and running and understand this, and as an independent trustee, to make sure you know what's expected of you and to have evidence that you keep this information on all the beneficial owners as defined. Okay, yeah, what is grey listing? I'm not even going to go too much into that. That is where we failed the test and there's now this bigger magnifying glass on us. And then obviously in an attempt to bypass being grey listed, 22nd December last year, government sneaked through some amendments to the Trust Property Control Act, these ones that we spoke about now, which are super onerous. So while everybody was on the beach, I don't remember it was a sunny day or not, but the 22nd of December, they sneak these through. And most of these requirements from a trustee perspective is effective from 1 April, so which is in less than 10 days. So very important that people are up and running and understand this, and as an independent trustee, to make sure you know what's expected of you and to have evidence that you keep this information on all the beneficial owners as defined. Yeah, so for trust service providers, I think I've covered that. So yeah, for trustees, obviously the board of trustees will be held liable. Obviously trust service providers, hopefully they know what they're doing. And I think reputationally, it's going to be so important, you know, more than ever. If there was a misunderstanding, a misconception, for example, I've spoken to a large audit firm who's using our software. I said, reputationally, you're going to have to deal with it. Because most of the accountants or clients we speak to, they would say, you know what, my accountant has got it sorted, you know, my financial statements are done. And the more we say, but that is not trust administration and compliance. So that's a perception, you know, the accountants are taking care of everything. If it's not taken care of, I advise the big audit firm, you better get acknowledgement in writing that you can put on file, because the audit side, the accounting side would actually do the financials. Let the client read this and say, we are doing your financial statements. This is not trust administration and trust compliance. You know, acknowledge that, you know, this is not what we do. If you require that, then refer it to this division who's actually using our system and, you know, can assist with administration. I think reputationally, you know, the moment the fork was going to hit the proverbial fan here, the reputationally, these large companies who haven't communicated with their clients what they do and what they don't do more specifically, you know, reputationally, I think it could be a massive issue. And again, as I said, you know, this is creating a good business opportunity. And it's clear that, you know, it is an extra service that you provide in terms of this extra layer of compliance, which you are able to charge for. Okay, let's see what is left. Okay, the signing of documents. Again, you would go there back to your trust deed. A lot of instances, the trust deeds specify how many people must sign these documents. If there are specific people listed by the name in the trust deed, you know, sometimes the founder or the estate planner want to be specifically included in opening bank accounts, signing agreements, you know, concluding bank transactions. You have to make sure that what you do here is in accordance with the actual trust deed. And as I say, you know, it's good and bad to be quite prescriptive, because if it's prescriptive, you prevent a lot of shenanigans, especially later generations. But you know, you need to then make sure you follow the rules in the trust deed, which is our constitutive charter. So again, the independent trustee needs to be involved in at least decisions. The execution of the document, you know, can happen by the estate planner or, you know, one or more trustees, but at least in actually concluding the decision by the board of trustees, that is what's important for the independent trustee to show that they have participated. Then, yeah, every trust has to have a bank account. So, you know, that doesn't even matter whether it's discussed in the trust deed. Every trust by law has to have a bank account in terms of Section 10 of the Trust Property Control Act, whether it's a dormant trust and inactive trust. So by the way, I see SARS has brought in inactive trusts on their tax return. So looks like there's a little bit of relief for the not so active trust. Remember one thing, beneficial ownership and the new FATF requirements did not distinguish between an active trust, passive trust, a dormant trust, whatever you want to call it. If a trust is not run properly and you move assets into trust, rather close that trust, physically deregister it, because you're going to pick up issues if you have not deregistered that trust with the master, especially for those independent trustees who, when the trust was registered many years ago, you forgot that, you know, you agreed to be independent trustee. So I think first starting point is to establish which trusts you've agreed to be the independent trustee on, and actually actively deal with those and make sure you can get off those that you're not very involved in. Okay, next slide. I want to leave some time for questions. Okay, accounting, auditing, record keeping. Again, the trust deed can be very prescriptive. No trust has to be audited. It is up to the estate planner to be prescriptive in terms of the level of accounting, the level of auditing. We need information to do tax returns. And that is the accounting system, or the system that you use must make sure you have the accounting information relevant to completing a proper tax return, and to now report information to SARS as a third-party data provider like the banks used to do. Record keeping, very different and very unique to a trust. It's not a rolling 5-year cycle like we have with you know, any other tax entities. In the Trust Property Control Act, it says for the life of the trust plus 5 years. So this is an onerous requirement. We, again, I think systems and independent trustee can play a major role, and be mindful for these manual systems. I had a client who accountant did his trust, or managed his trust affairs for 40 years. The old man retired and moved to his children in Canada, and literally the week before he moved overseas, he burned all his records, including my client's records for the last 40 years on that trust. So especially newer generation, make sure we have copies in electronic format in a central repository where all the trustees have access. So just from a practical perspective. Okay, next slide. Yeah, the independent trustees, you know, we saw that they have this additional responsibility to report any wrongdoing, and obviously that would be to the master. And we also know that if financials are to be audited, the auditor have to allow the trustees to correct it. So even though independent trustee, when you does not have a kind of a bigger responsibility as far as, you know, the normal trustees' roles are concerned, they have this almost like a special role. If you just look at the sworn affidavit, that they have to oversee you know, the trustees, that they actually, you know, act in accordance with the trust deed. And then, you know, if you look at the two main stakeholders, well, probably three now. So it is the beneficiaries, major stakeholder. I've got a big issue with trustees who do not want to report to beneficiaries, because they are the ultimate beneficial owners in a trust potentially. Secondly, it is SARS, whether we like it or not, and given IT3T now, they are becoming a big stakeholder in a trust, and we need to report to them. And also now the master and the authorities to make sure that we can account on who the beneficial owners are. So I think the independent trustee who's hopefully selected by hand in terms of having the right knowledge, you know, the tax knowledge and experience to guide the trustees in terms of what they are supposed to do, because you are you know, linked to the other trustees, and you won't be able to claim ignorance and say, sorry, I didn't know what these family trustees were doing. And I'm just worried from a reputational perspective, you know, the trustees may turn around and say, but we thought you were taking care of this. So again, with your appointment letters and those, make sure that you stipulate clearly what you would do as an independent trustee, that you make it clear to the rest of the board of trustees that they take responsibility with you, and make them aware of non-compliance, and have an indemnity in place if they exclude you deliberately, because we often see that the minority trustee, who's the independent trustee, is like expected to be this sleeping, inactive trustee, and must just sign on the dotted line, a wad of papers at some point to prove compliance. So don't fall into that trap. And if you feel that this is what you should do, rather resign as a trustee on that trust. Okay, the next slide. The trust account. The trust account, you would have a look at the trust deed as well. Could stipulate, what format the trust account should be kept in. Again, the information that you need to collate there is to report to all your different stakeholders, whether it's to your beneficiaries, whether it's to SARS, and now also to the authorities in terms of the beneficial ownership. Okay, I think got anything left. The custody of documents, I think we discussed that. Life of the trust plus 5 years. The failure of the independent trustees to perform their duties. Yeah, I think we said enough now in terms of making sure that you get rewarded. It's now a risk-based fee that we need to price for. They can't expect you to just sit as a puppet trustee and act blindly. The risk is just too big, especially now given the new Trust Property Control Act measures. Remuneration, the Trust Property Control Act is very clear. Unless there is remuneration specified in a trust deed, then the master may determine reasonable remuneration. So that is not very clear in terms of what reasonable means. But we need to make sure that when we act as a trustee, that there's no limitation in terms, especially the old trust deed says no trustee can receive any remuneration. For what other reason would you do it? And to me, that almost signals a bit of a conflict of interest. Why you would provide a professional service at no fee, and make sure that the trust deed allows you to charge a remuneration that is charged by a normal professional person. Okay, so I think we threw all the slides. I think we can jump into questions. Jan?
Let's start. I see there's obviously a lot of people that just greeted this morning. Good morning, Jan. Let's quickly go. Morning. Will a recording of this presentation be made available? Yes, there's definitely. It's been recorded. Remember, you're also entitled to your CPD point. Will a copy of the slideshow be circulated afterwards? Yes, just send us an email to Charlene@janljordaan.co.za. She will send everything to you. How do we register for the Living Will session? You can just send us an email. We will send you the necessary. You can send it to Charlene@janljordaan.co.za. Phia, the whole concept of beneficial owner is not reconcilable with the core principle of separating trust assets from the founder's assets. I really think that the powers to be who are searching for the beneficial owner everywhere should have a different name to, where am I now? Different name to refer to the control of trusts.
I fully agree, because a lot of people are saying, we are introducing concepts now into South African trust law, which is counter to how the courts over centuries have struggled to try and define a trust, to actually get to the conclusion that it's actually just an accumulation of assets. It's just a contract. So now we're trying to put a legal person badge on it with beneficial owners, and we call people beneficial owners who could never be beneficial owners. For example, if you look at a founder for a trust to exist, you have to relinquish control. So if we don't, then did the founder ever have the intention to create a trust? If you didn't have the intention, maybe it's not a trust then, because then it's a sham trust. So the founder could never be a beneficial owner in that role. When you look at the trustees, we as trustees hold assets, in our capacity as trustees, not as a beneficial owner. And Section 2 on Trust Property Control Act specifically makes reference to the fact that a trustee does not own the property as a beneficial owner. It's in a capacity. Only if you are also a beneficiary, then you could potentially benefit. Beneficiaries, if you look at the discretionary South African trust, which is a SARS label, we do not want to talk about, these assets belong to beneficiaries, because then from a tax perspective, we may be caught to tax all the trust income in the hands of the beneficiaries. So we don't want to talk about them as beneficial owners. Therefore, I said, just give it a different label. So you want information, transparency, and I'm just really worried what they're going to do with the information, with all the leaks and stuff that we have at the Master's office. I really hope it will be treated confidentially. But yeah, the different parties not well defined.
Yeah, I think the next is more a statement than a question. Where there are more than one family trustee, I always insist on consent. I think that's what there's T missing. Always insist on consensus decision making to ensure that the trust cannot be seen as controlled by a family or the head of the family. I don't know if you want to comment on that statement.
Yeah, I think that consensus, we actually see it very seldomly that you need unanimous decision. I think they made provision for a majority vote to actually allow a trust to kind of make decisions. Otherwise, you potentially be in stalemate all the time and a trust can't make any decision, which is, again, very frustrating. And if you then don't make provision for alternative dispute mechanisms, you have to go to court, or the decision just won't be made. So you can see you can literally halt the trust, especially if trustees don't agree. So I think the majority vote is a good mechanism to allow trustees. However, we need to be mindful then again of the number of trustees that we allow in the trust. If you have the husband and wife against the independent trustee, the independent trustee is not going to have much of a say. If you have 4 trustees, at least, it's more difficult to get a majority vote, and people are going to really have to apply their minds. You probably 1 to 3 versus 1, which is harder than a 1 versus 2. So, yeah, I think there's pros and cons. What we normally do is we distinguish between the day-to-day stuff, that could be majority decision, then we reserve the major decisions to potentially have a unanimous vote. And I think then you're actually allowing the trust to kind of exist. But when it's coming to the important decisions, you're not going to allow or sidestep the independent trustee by the founder literally just bulldozing you.
Okay, before we carry on, we did say a maximum of 90 minutes, but if you're comfortable, Phia, can we carry on? Because I see there's still lots of questions. Are you okay?
No, we can carry on a bit.
Wonderful.
Yes.
Nani says, what will the situation be on a testamentary trust, which is not family business trust?
I'm sure you refer now to the definition of independent trustee and when independent trustee is required. Yeah, and you see there that the J417, they also speak in vivos trust. So it's becoming a little bit difficult with the testamentary trust because they are kind of treated similarly, the process with a master. We haven't, obviously in your will, you are going to appoint a trustee, and, that's not necessarily going to be a independent trustee. It could be a family member. So I think the will, because that is, remember, the wish of the testator in terms of who they want to act as the trustee. So there, the independent trustee would play a less of a role. However, I believe that often when the family members are appointed as the sole trustees, there's a lot of abuse. So I think it's an important consideration, who you appoint as a trustee.
Yeah, thank you. Then Albert Fritz from Pretoria says, point 7, I'm not sure which is point 7, but he's asking the question, is any trustee not by default considered a beneficiary?
No, a trustee can never automatically be a beneficiary. That point 7 is on the sworn affidavit, where you said you are not a beneficiary of the trust. Now, that's the only way you can be a truly independent trustee, because obviously if you were a beneficiary, then you may potentially want to act in your own interest. So independent trustee can only ever qualify as independent trustee if you are not a beneficiary of that trust.
That's interesting. Independent trustee cannot act as an independent trustee if he's a beneficiary.
Correct. Then by design it is qualified.
Yeah. Albert, another question. Who should act as chair of all these trustee meetings?
Oh, that is a very nice question and an interesting one. Because we're trying to retain control, we see in some trustees very clever design where the estate planner or controlling trustee or executive trustees, we call them, reserve themselves this chairperson role. And often that chairperson role has got a extra vote or casting vote. Now that clearly is wrong. So again, you would probably have a look at your trust deed, what it allows. Most often they just say the trustees can elect a chairperson, must say that the chairperson does not have a casting vote, because clearly then we crossing that line of joint ownership, joint control, where every trustee has got a say. So be mindful of those provisions in the trust deed. But yes, again, you can be very specific in terms of who can be, who can't be, for how long, who selects a chairperson, but that person is really more for kind of administrative functions. It could never be seen to be a person who can swing a decision.
Okay. Rika Swat asked, will the banks require the independent trustee to sign surety on behalf of the trust if the trust takes up a loan or a bond? If you don't mind, Phia, I'll answer that, because we've just had a week or two ago, we had a similar situation where the bank asked the trustees to sign surety. We went back to the bank and said there's an independent trustee, and the bank's just required us to give an affidavit, get an affidavit from the trustees to inform the bank or to mention that ABC is the independent trustee, and on that basis, the bank said it wasn't necessary for him or her to sign as surety. Happy with that, Phia?
Yes, from a practical perspective, we have seen, unfortunately, some of the banks who just tick the box and say all the trustees have to sign, which you just have to resist and push back. Normally, the banks are they're actually looking right through an entity and try and find the ultimate client with the balance sheet. And hopefully common sense will prevail to say, it's actually the family trust for the benefit of their family. So the independent trustee can't really stand on the line for risk. Then you're going to have, the pricing is going to have to be much more than just a normal monthly fee, right?
Yeah.
Just push back, because we have seen the tick the box, all the trustees have to sign, which is just ridiculous.
We can obtain the slides. Please email Charlene at janljordaan.co.za. Deed silent on fee. What is accepted as usual fee? That's from Mr. Shapiro.
Yes, so so the process that you have to follow, first of all, you look at the trust deed. If the trust deed does not have anything on remuneration, only then can you turn to the master. If the trust deed deals with fees already, then the master is not going to interfere. If the trust deed is silent, then remember the Trust Property Control Act said a reasonable fee. So there was a lot of discussion, and it's actually expected that normal family trustees, don't have to earn fees because they're probably doing it for the family. Whereas the independent trustee, they said normally it's like a professional person. So what you would normally charge, like per hour, per meeting, I think there are different bases, and we see people pricing it differently. Some people price it a percentage of assets. There are various ways that you can tackle it. I think you'd have to have a justifiable way, and then obviously, it is up to the master then to approve that reasonable remuneration, obviously, as you would have motivated your fee.
Will it be a good statement to make to say that maybe that's something that you should agree with all the other trustees in writing?
Probably before you take on the role as the independent trustee. And again, I just want to reiterate, remember, it is becoming a risk pricing decision now. Probably much riskier than you as an attorney or a tax practitioner giving advice to your client in terms of what the different options are of treating different situations. Here, you are on the line personally. For that 10 million rand. So, to price for that risk is a tricky situation. So potentially you can add a risk premium to what you charge as like a normal rate for normal clients.
Okay, Gordon Stewart makes a statement, says there's no point in trying to push back on UBOs for trust. FATF require that it is done as legal arrangements are considered to be high risk. Yeah.
Sorry, what is the question there?
He says there is no point in trying to push back on UBOs for trust. FATF, I hope I pronounce it correctly, FATF require that it is done as legal arrangements are considered to be high risk.
Yeah, so I think it's a statement, and I agree with that, regardless of what you label the different role players in a trust. FATF is quite prescriptive in terms of which stakeholders or role players in a trust they want it for. I just think it's a misleading label that we have given it in South African context because of how unique a trust in South Africa is. But they're not budging, they need it, so over myself, we're not going to convince them, we're not going to give it for founders because we don't believe they're beneficial owners. So it's not for founders, beneficiaries, and trustees. They need that information.
Elsa van der Walt, I presume, she says, is there a method / format yet for reporting as beneficial owner? And the September deadline, reports must be in, or is this just the start date for reporting?
Okay, so there's two issues. The beneficial ownership one, the fact that the trustees have to keep information is effective 1 April. The draft regulations are circulated. I have not seen them gazetted yet. So yeah, we have 10 days and we still don't even know what's required. I participated in providing comments on the draft regulations. They are on the internet as well. So there it tells you what you require per beneficial owner. So yeah, you can work on the draft regulations. I don't think they're going to change too much there. Yeah, so I think you can work on that format, and then you need it for all those parties that we spoke about. And then when the master's ready, you're going to have to submit that. As far as the IT3Ts are concerned, we are helping them to test. First of all, it was said April, May. Last week, they said SARS may not be ready. And I think they actually got the whole concept of who is the data providers, because they thought it sits under the IT3 banner. So it's going to be the banks who's submitting the IT3Ts as well, like they've done with the IT3s. I said to them, like, catch a wake up. It's actually 1,000 boards of trustees who you've actually made data providers now to SARS. So it's not going to be the banks. Most of those trusts that they are after to capture trusts that made distributions are the family trusts, which are sitting with accountants, attorneys, financial advisors, trust service providers. So from a system perspective, they had to kind of go back to the drawing board. We're busy talking to them in terms of how to submit that data. So the testing would probably only be June, July. And they said, although on their website, they have given a first submission date compulsory on September this year, they will probably not make it compulsory. So it sounds a little bit weird, but it does not look like they're going to penalize people who are not in a position to provide it this year. However, there's a lot to get in order. So the sooner people engage and get their affairs in order and get onto a proper system, the better. because submission will probably definitely be next year.
Mr. Shapiro is asking, do the reporting provisions apply to testamentary trusts?
The beneficial ownership information, I assume.
Yeah.
They didn't distinguish between types of trusts, so it is all types of trusts.
It's all kinds of trusts.
Mm.
Okay, Charlene at Jan L Jordaan.co.za. That's the email. Charlene, you spell it CHARLENE, or you can send it to info@janljordaan.co.za. One of the two. Yeah, there's Charlene sending her. She sent her email address. It's Charlene@janljordaan.co.za. Is there a conflict between the POPI Act and the new information sharing requirements effective 1st of April?
Yeah, I think there's a big concern raised, especially by the fiduciary industry, in terms of what is going to happen with that information. Obviously, it's the first time. If you think about it, when you register a trust, you know, the master does know who the founder is, the then trustees, and the named beneficiaries in the trust deed. It is just to keep that information updated now on a regular basis. So I think there's a lot of concern in terms of what's going to happen with that information. However, it is going to be real-time updated information, and it's going to be in a central place on a digital register with the master, which we know a lot of the old trusts, that information is not in a digital system yet. So it does raise concern in terms of the protection of that information. And in the promulgation, they said, you know, the minister may approve people to have access to that information. Interestingly, SARS is one of the people. So I think for the first time, SARS would now know who the trusts are, which trusts are registered with the master, and then to work back and say, right, where is their tax registration, where's their tax returns?
Okay. Ilona asked, what is the best way to appoint an independent trustee for a family trust where the current two trustees are permanently living in different countries abroad?
I'm not sure what the question is. The first issue is careful, and I think that's what the amendment of the Trust Property Control Act Section 8 tried to achieve, is the master needs to and should be aware of people who are immigrating, because obviously how's the master going to run after trustees sitting, you know, somewhere in the world and they abuse trust assets? So they may want them to put down security. So people need to be very mindful. And now with this beneficial ownership reporting, now they're going to know when trustees are immigrating, because I think a lot of the times trustees who left South Africa were not aware of that requirement to inform the master of the address change within 14 days. So, you know, there's a lot to be mindful of now, especially when you immigrate, that it may trigger the master now to call for security to kind of, protect the assets in South Africa. So the role of an independent trustee is then going to become really important if we have a number of trustees moving offshore. And traditionally, 2/3 of the trustees had to be, for exchange control purposes, South African resident. And now with all these changes, at the Reserve Bank, they said we should actually turn to the double tax agreements now, so which may require a majority of the trustees to be South African. So depending which jurisdiction we're in, we need to be mindful now that we, stay within, the requirements to potentially have majority trustees South Africa. And then obviously the master can now call for security if most of these people are sitting all over the world and they can't get a handle on them if things go wrong.
The next question is from Mr. Martin Brouwer. He's a very wise attorney, and he's actually a mentor of mine without him knowing that. He says, does it avail an independent trustee to obtain an indemnity from the beneficiary trustees in respect of any claims made against him, her, in the exercise of his duties? And in bracket, negligence excluded.
Yeah. Yeah, so if you look at section 9.1 and 9.2, it says no clause in the trust deed can actually absolve a trustee from that responsibility or indemnify them. So in the trust deed, you can't do that. However, nothing stops you outside of the trust deed to have an arrangement in terms of, if I do X, Y, Z, or if you do X, Y, Z, you will indemnify me, such as if you don't keep your information up to date, which is a reasonable request, because, how on earth are you going to keep track of everybody's movements? So I just think from a risk perspective, we need to consider that outside of the trust deed, but you can't write that into the actual trust deed.
You can't?
Not in the trust deed, because section 9.2 prevents us.
Okay. Is there a deadline for sharing the beneficial ownership of trusts with the master?
That is one of the gray areas where we're still seeking clarity. They have not given a time frame. Now, we know, in the perfect world, the master is going to have a digital platform where digitally the trustees can upload information. So, what would the allowed time frame be? Knowing that the master is not anywhere close to having such a system, the trustees have to have it handy. But the amendments to the Act did not even give guidance in terms of how long they allow us to actually have that information. It almost sounds like they wanted real time. So I don't know whether the master would also allow like a 2-week time frame for, like they do currently with trustees, to provide their updated information. But there is no time allocation currently for, how quickly you have to update records.
Phia, we way over time. Are you still okay to carry on?
Yeah, we can do the last wrap-up minutes.
Clearly, there's a lot of questions and a lot of interest. Clive Roberts, I suppose is there an insurance to indemnifying trustees like directors on a company?
Yes, we have actually concluded a PI cover for trust administrators / independent trustees. And specifically because if people use the system, there is a great discount, because as you can understand, for insurers to blindly insure trustees is a major risk for them. So yes, there is PI cover out, and I'm busy preparing, and I think there's a misconception often that do not think your normal cover as a financial advisor, your normal cover as an attorney, your normal cover as a accountant covers the role of a trustee that is normally specifically excluded. So that is something you have to check in your insurance schedule, that it's specifically covered, and if not, and you provide those services to get that in place, and check the wording to see how broad it would go. Would it cover things such as the these new requirements now for FATF?
Johan, if you don't mind, I'm going to skip your question. Thank you. Always very insightful. Time remind the importance. How much CPD points? 1.5. Godiva. Would you consider doing training on trust law and the Trust Property Control Act? I think that's exactly what you're doing, Phia. I saw a webinar that you're presenting next week or some other time.
Mm-hmm. Okay,
so there you can see in the background, you can see Phia's contact details. You're welcome to make contact with her. They will probably only... if the trust owns a business and fraud has been committed in the business, who triggers the charges, the directors or trustees?
Yeah, I think, and there's always kind of gray areas as far as the responsibilities are concerned. It's important to understand that the trustees normally, when they hold shares in a company, the trustees are acting as the shareholders. Now, especially if there are, other shareholders together in the same company, the directors then have to act in the best interest of all the shareholders, not just for the one trust. So the directors, would be responsible for the company, what's happening in the company, and then the shareholders, obviously, being the trustees in that capacity. So the two roles are very distinct, and I also wrote a lot about that in my book in terms of director responsibilities versus the trustees' responsibility as a shareholder of that company.
All right, Phia, thank you. As I said, we're way over our time. Thank you for going the extra mile. We did say we will allow people to ask questions, but I think we're way over time. So thank you, everybody. Phia van der Spuy, CEO and co-founder of Trustees. You can see a telephone number. Her email address is phia@trustees.co.za, and even the email of the website. Phia, I'm sure they're welcome to contact you. Thank you so much for making time. We really appreciate it. And Mr. Martin Brouwer, as I said, mentioned earlier on, he once said to me that if you're happy in your business, if you know what you're doing, you should be happy in your business. And I think you must be very happy in your business. Clearly, you know exactly what you're doing. Thank you, Phia. Thanks, everybody. I see there's Michelle raised her hand. Michelle, do you want to ask a last question quickly? Okay, people, I have to make the call that unfortunately we can't carry on. We're way over time. So thank you, Phia, and we'll chat soon.
Thank you very much. Have a nice day.
Bye-bye.